Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of December 16th through December 20th, 2024, where we'll be looking and trying to navigate the Federal Reserve interest rate decision for December of 2024. So let's get started. Welcome, Walter Lyons, Carmen. Thank you for joining us in the chat today. Good to see you. Hope you all had a great trading week and are doing well. So here's our Google document with our notes for part one of our weekly trading game plan for the trading week of December 16th through December 20th. We keep our notes for our weekly trading game plans in publicly accessible Google documents. Our notes documents contain links to bonus videos, to the tools and resources we use to come up with our trading strategies, trade ideas for the trading week. You can find a direct link to this Google document in the description box below. We store all of our weekly trading game plan notes, documents in a publicly accessible Google Drive folder. So you can refer back to the notes for this week as well as previous weekly trading game plans. And you can also find a direct link to that Google Drive folder in the description box below. So first we'll take a look at how the markets ended up on Friday. You see the markets were generally ended up pretty flat on Friday. The Dow ended up down 0.2%. NASDAQ up 0.12%, and the S&P was completely flat for the day. See, we had a very initial push up in all the indices, and then they kind of faded out through the day. Again, S&P ended up flat, NASDAQ pretty flat, and the Dow slightly declined. We had many more decliners than advancers, so 66% declining, 30% advancing. We've got a 50-50 split now above the 50-day moving average. So again, even though we've seen the markets the indices kind of bleed up, there's a lot of discussion that there's a lot of weakness, lack of breadth, weakness under the covers. We still got 61% above their 200-day moving average, 39% below. So you can see this indicates slightly bullish, although again, it was generally flat. Heat map, other than Tesla and Broadcom, most of the Mag 7s were red, gave back some. We had a little bit of rotation in and out of the Mag 7 between Wednesday, Thursday, Friday. A little bit of green in healthcare and industrials, but otherwise, generally all the sectors were red. Welcome to Crow. Good to see you. Hope you had a great trading week. Some recent news. Record inflows into U.S. stocks to drive Santa rally. We'll talk about the Santa rally and the end of the month strategies in our strategy section. Fed rate view and focus, robust stock years. Dow falls for the 7th day, Broadcom rallies, Dow slides for the 7th day. Longest losing streak since 2020. We'll see the Dow's rolled over and headed down. Saw oil break above 70. I think it tested about 72, we'll see. So now it's got support at 70. Natural gas been bouncing between about 3 and 350 and getting pretty volatile moves at those support and resistance points. See gold broke down below 2,700. We'll talk about support and resistance in gold as well. We see all the indices currently pointing down, with the Russell being the weakest. Saw Treasury yields made a significant bounce up towards the end of the week. We've now got the 30-year now back above 4.5. It's at almost 4.62. The 10-year at almost 4.4, and the 5-year at 4.25. And we'll talk about how it appears that the bond market is kind of fighting the Fed when we look at the probabilities that the Fed's going to cut again this week. And again, we see the bond market is kind of fighting the Fed. Yields are going up rather than down. Bitcoin's now up over 100,000 and holding, so it's got support at 100,000. Welcome, Ketan, MD. Thank you all for joining us today. Hope you all had a great trading week and are doing well. So now we'll look at a breakdown of the major indices and technology components. Just a quick reminder, you can find these screeners in our notes documents as well as in the screener sheets in our ETFs and watch list Google Sheets. Welcome to Ricky Khan. Did I see Gabe Babe? Yep, thank you all for joining us today. Fairchild, good to see you all. Hope you all are doing well and have a great trading week. So we see the Dow rolled over, headed back down to its lower trend line, to its moving average. So we'd expect, further potential downside in the Dow. Similarly, Russell again rolled over just above that upper trend line, coming down very near to that lower trend line and its moving average. Q's been very strong, S&P pretty strong, in my humble opinion, driven mostly by the Mag 7. Broader technology not as strong other than Broadcom and the Mag 7. Again, in our strategy section, we'll talk more about our expectations through the end of the year in terms of these trends, this momentum. Again, S&P not quite as strong, getting a narrowing upward trending channel. Again, getting close to that lower trend line. Again, my humble opinion, I'd expect a general bleed up through the end of the year in the S&P. General trend up in the Qs and the Nasdaq, again driven mostly by the Mag 7 mega cap techs. Look at a breakdown of the technology components. See, it looks like ARC found a top, retrace slightly, consolidate a little bit. We're watching the inverse ETF on ARC-K, which is SARC, and looking for further potential downside, another retest of that high potential downside in ARC-K. You can see it's way extended above its moving average, got several gaps to fill, etc. FANG U's, again, the mega cap techs, the FANG stocks, the Magnificent Seven, very strong, trending upward, and then again, in my humble opinion, will continue to trend upward. Again, just a quick reminder, none of our content should be considered financial advice. We're not financial advisors. All of our content is for education and entertainment purposes only. And we see these strong reactions in biotech. So it went, tested its moving averages, got strongly rejected down. So it's very close to its lower trend line, potentially get a bounce, give potential death cross very, very soon in biotech. Again, violent moves, a lot of opportunities for short-term traders using LabU and LabD, LabU long, LabD short. This is a potential sector. If we do get a Fed interest rate cut, we might see an exuberant bounce in LabU. So again, opportunity for short-term traders if you get that exuberant bounce, and then you can get a strong rejection. So the long-term trend is probably down, but you can get these violent moves, make some good money in biotech with LabU, LabD. Semiconductors hasn't really been going anywhere lately. We've got a little bit of a pop up on that Broadcom news. You can see it's still below its long-term moving average, still generally flat. We'll look for opportunities to catch a support level in SOXL. We've talked about that a bit. Again, TQs just based on the NASDAQ, again, driven mostly, in my humble opinion, by the Mag 7, mega cap tech. And again, my humble opinion, I think it'll continue to trend upward. Broader technology, again, not as strong, pretty well flat right now. It did break out of that wedge, but again, not as much strength, not as much breadth, and probably will continue to be somewhat flat. So I hope that all helps. Okay, let me grab a quick drink and we'll look at the groups, the sectors, the industry breakdown. Okay, if we look at the groups, the sector breakdown, see technology and cyclicals and utilities were the only positive sectors from Friday, with technology leading. Weakest sectors, materials, communication services, energy, and real estate. Again, bond yields popping up, pressuring real estate down. For the week, only communication services, cyclicals, positive, even defensives, negative, technology, slightly negative. So generally, sectors were down. Weakest healthcare, utilities, industrials, materials, and again, real estate. For the month, cyclicals, technology was positive and defensive. So we've got a mixture of risk on and risk off. But again, my humble opinion, the Mag 7 mega cap tech could be considered a risk off at this point. So somewhat of a defensive stance. Weakest energy, healthcare. Again, my humble opinion, I think healthcare will continue to decline due to the RFK appointment. We look at the breakdown of the industries. So we had some pharmaceutical retailers very positive, semiconductors again positive on the Broadcom news. Solar bounced back up. Again, solar's been very volatile. Sensitive again to interest rates, bond yields. So again, if we get a cut, might see another bounce in solar. Some of the REITs positive. Some REITs negative. Oil somewhat negative, even though, again, we saw oil bounce back up over 70. Most of the materials weak, aluminum, copper, silver, gold, even uranium was down a bit. Let me select that one. Let's look at the uranium stocks. You can see they've rolled over, headed back down. So CCJ, DNN, LEU, etc. So we'll see if that trend continues. If that trend continues down in some of the uranium stocks we like, UROI, LEU, DNN, etc. CCJ is very popular. So again, we'll see if that rollover continues, and in the future might have an opportunity to swing uranium back up. For the week, again, retail, pharmaceutical retailers, auto manufacturers actually positive, oil slightly negative. Most of the REITs pretty negative. Again, weakest steel, uranium, aluminum. For the month so far, kind of a mixture. Solar quite positive for the month. Gold slightly positive. Uranium slightly positive. Oil and gas pretty flat. REITs pretty flat. Some negative. Again, base of materials pretty weak for the month. Silver, gold retraced quite a bit. Steel, healthcare, UNH. Oil generally negative. So I hope that all helps. Again, in my humble opinion, I expect trends that we've seen for the month so far to pretty much continue through the month, except we'll get this perturbation from the Fed interest rate decision. So those stocks, those industries that are sensitive to interest rates like real estate, solar, etc., small caps, if we do get a cut, they will react positively. If we don't get a cut, they could react pretty negatively. So I hope that all helps. So next we'll look at the economic data from the past week, and we'll talk about the economic data coming up for this week, as well as the Fed interest rate decision. Just a quick reminder, as the important economic data or important economic news comes out, try to capture that as quickly as possible and post that in the Surf the Markets channel of our Discord. Our Discord is free to join. You can find a free invite in the description box below. We'd love to have you join our Discord. You can, again, get real-time economic news and data, so you can see when the important economic data comes out, try to capture a screenshot from investing.com, post the raw data. Again, as important economic news comes out, also capture that, post that in the Surf the Markets channel of our Discord. Again, we have all kinds of channels to discuss different trading styles, different asset classes. So we'd love to have you join our Discord. You can have 24/7 discussions on all things related to trading. And again, get real-time data and real-time economic news. Okay, so let me grab a quick drink. We'll talk about the highlights of the economic data from last week, the upcoming economic data for next week. Okay, so last Wednesday we got core CPI, we got CPI data, probably the most watched inflation measure from retail traders, and it was pretty much in line. So we see core CPI 0.3, year on year 2.7. So again, pretty much in line. Market, even though this is somewhat high, it's not showing inflation coming down. Since it was as expected, market pretty much reacted positively. So we had a little bit of a bounce on Wednesday based on this inline economic data. Now, real earnings was actually up, better than expected. So then Thursday, we got PPI data. This was actually worse than expected. So core PPI was 3.4 versus 3.2 expected. Although X food and energy, 0.1 versus 0.2 expected, a little better than expectations. But month on month PPI 0.4 and year on year still at 3%. So in my humble opinion, again, this is negative from an inflationary standpoint. This is the front end of the supply chain. And in my humble opinion, this says inflation will continue to be sticky, hold above the Fed's 2% target. And again, in my humble opinion, this would indicate the Fed should not cut and should hold. Market did react a little negatively to this, but not really, in my humble opinion, as negative as it is, because again, this says inflation is sticky, and we're not going to come down to the Fed's 2% anytime soon. We did see a little deterioration in the job market, so we had initial claims 242 versus 221 expected. Continuing claims bumped up a little bit as well. So again, a little slight deterioration in the job market. But again, I think the Fed should focus on getting inflation down, not have to worry as much with the job market. Employment still relatively low at 4.2, but we'll see what they actually do. And we'll look at the probabilities in our strategy section. So we'll look at the rest of the economic data from last week. So Monday, got some wholesale trade, a little negative. Bond yield or bond auctions, actually pretty good. OPEC meeting, again, OPEC is deferring their production cuts, so they're holding production cuts till next year. Non-farm productivity flat, unit cost down a little bit. Mortgage rates pretty steady. Applications up. Talked about CPI data. Crude oil inventories down more than expected. Cleveland CPI a little bit better. Talked about jobless claims and PPI data. Natural gas storage down more than expected, but again, we just see natural gas prices just been volatile between 3 and 350, although trending upward. Exports, imports prices higher than expected. Rig count flat, completely flat, so no change in rig count. Let's look at the highlights of data for next week. So Tuesday, we'll see we've got retail sales data. Wednesday, we've got the Fed interest rate decision. So we'll look at what the expectation is, if we expect a cut or not. Can also see for the first year, for the next year, we're expecting a couple cuts, and longer term, about a point down. So the current rate previously was 4.4, and a year from then, they're expecting a full point cut going forward. Again, on Wednesday, we'll get an SEP, economic projections. We'll see if that changes. So if these projections change from the last time we got an SEP, and we'll get the decision at 2 o'clock, and then we'll get the Fed Chair Powell coming out at 2:30. And hear his press conference, and hopefully all of this will give us a better idea of what the trajectory is for interest rates going into 2025. Then Thursday, we get PCE and GDP data. Friday, we get more PCE data and Michigan sentiment. See if I missed anything else for next week. Retail sales data on Tuesday. Some housing data, mortgages on Wednesday. And here's all the interest rates, projections. And we get jobless claims data, GDP data on Thursday, PCE and Michigan sentiment on Friday, rig counts, etc. See if we have any earnings left. So we should be winding up on earnings. Okay, so UROI, so we've got some uranium, some gold. If anyone knows of any other significant earnings, there's Micron, so some semiconductors, some consumer staples, some home builders, FedEx, so that'll be interesting to hear their projections for the holiday season. That and the retail sales data might give us some insight into retail for the holiday season. So again, you can look at through all the earnings. Again, should be winding up pretty much, a lot less volatility due to earnings. Again, much more focus on the Fed interest rate decision and projections going forward. Welcome, Alan Krantz. Thank you for joining us. Hope you're doing well. Again, we'll get the interest rate decision, new economic projections on the 18th. Talked about earnings. So let me grab a drink and we'll look at the market screen in Webull. Okay, just a quick reminder, if you're not already using Webull, you can still get up to 40 free fractional shares of stock by opening and funding your account with as little as $2,000. Each fractional share worth $3,000 to $3,000. If you fund with less than 2K, you can get 20 free fractional shares of stock. Also, just a reminder that now you can trade 24 by 5, 24 hours a day, 5 days a week on Webull. And we did a look at the overnight trading, 24-hour trading on Webull last week. And you can watch that video for more information on 24-hour trading in Webull via the link in our notes. Also, we've posted more information and links to where you can get more information on 24-hour trading on Webull in our Discord, and you can access that via the link in the notes. So I hope that all helps. Again, for some of our futures trader, forex traders, etc., you may find that 24-hour trading in Webull very advantageous. So I'm using the market screen of the online browser version of Webull. So if we look at the distribution from Friday, see a lot of weakness under the covers. So we had about 2-to-1 decliners versus advancers, although the percent of decliners was relatively small. Again, strong imbalance to the downside. Interesting inflows. So we had a slight dip in both the NASDAQ and NYSE. NASDAQ continued down, so we had significant outflows out of the NASDAQ. The NYSE did recover. So kind of contrary to what we saw in the Dow index and the NASDAQ Qs index. So even though the Qs index went up, there was significant outflows. The Dow went down, but we had some positive inflows in the NYSE, so I thought that was interesting. Also, we see our fear and greed index is now neutral. So last week we were in significant greed. We've kind of balanced back out to neutral setting. We look at the trend, go back, I'll look at 3 months. So it looks like we hit peak greed about December 3rd. So we've come back down. We're pretty much neutral, not nearly as negative as late November or early November. So we'll see what the reaction again is to the Fed interest rate decision. We bounce back up to that high greed level or break down to a higher fear level. And just a quick reminder, you can also see the near-term earnings calendar for next week, or dividends, splits, etc., economic data in the calendar section in Webull, and you can go day by day for next week. Just go to next week, and then you can go again day by day, earnings, dividends, splits, etc. So you can find ex-dividend dates as well. We look at the best performing industries for the week. So auto parts recovered a little bit. Semiconductors slightly positive. Beverages, Celsius recovered. Transport, that's positive. Networking, retail, actually retail mostly negative. Coal pretty negative. Freight pretty negative. Apparel positive. Food, defenses pretty split. Get the ETFs. So short the Russell, up on the Qs, down on small caps, down on the Dow, down on mid caps, and up on the Qs, up on Bitcoin, up short the yen, up on the euro, short the Russell, short small caps. This is a momentum ETF that we'll mention. Looks like a dividend payer on the SOX. Industrial's pretty negative, healthcare very negative, financials negative. In my humble opinion, probably profit taking in financials. Utilities negative, again, potentially some profit taking in utilities. Energy, real estate negative. Technology pretty split. Again, that's some momentum. Semiconductors positive. There's several semiconductors positive. Basic materials very negative. Nickel positive though. Commodities, oil up. 25-year bonds positive, I bonds positive, so another indication that inflation is going to be stickier than expected. Okay, next we'll look at futures. Again, a reminder, you can also trade futures in Webull. You can get more information on futures trading via the link and posting in our Discord. We look at the futures, again, we see that strong rollover in the Dow, potentially going back and testing its mid-November low. So again, strong trend down in the Dow, strong trend up in the NASDAQ. Again, my humble opinion, I think these trends will continue generally through the end of the year. And the NASDAQ, in my humble opinion, continue to trend up. Dow probably retest that low, trend down, maybe stabilize there. S&P's kind of rolled over. It's kind of flattening out. Probably get good support around 6,000. The long-term trend up, but again, a shorter term back down to the lower trend line. Get a lot of weakness in the Russell. And we'll see if we get that interest rate cut, if we get a last hurrah tempted bounce in the Russell. Otherwise, we'll see if it could have significant weakness back down at least to 2,300 and possibly even lower if we don't get that rate cut. Again, watch the Russell for high sensitivity to that rate cut decision. Nikkei back up, Euro stocks bounce back up to where it was previously. German DAX very strong. And we talked about oil. Oil's testing near 72, gets rejected. Now it's got good support at 70. So it did break back above that 70. So we'll see if that holds. Probably go try to retest 72 again. See if it rejects back down. Let's look at the VIX term structure as well. Again, VIX kind of flattened out. It's very low. As we discussed, this seasonal trend is down on the VIX. And let's look at the term structure right now. So just a quick reminder, you can find this term structure tool on our homepage in the link section of our homepage. Homepage is beachbumtrading.com, bum without the U. If we go down, we'll also be looking at these CME Fed Watch tool and the other Fed tool, Fed Watch tool, which you can also find in the link section of our homepage. So if we look at the VIX term structure, so we can see January is significantly higher than December in the VIX. We've got a pretty strong contango now going forward. The current VIX is still significantly below the December futures. And then again, we've got a pretty strong contango going up into the middle of next year. So we expect, the VIX to trend up into next year. Also look at this historical prices, I think is kind of interesting. So show the previous day and today. Again, we see the trend. We can overlay the term. So we can see going forward, we expect it to go higher. It has come up a little bit, but again, pretty flat recently. So I hope that helps. So again, natural gas keeps testing that 350 level, getting rejected, trending back down to 3, bounces back up. But again, the longer term trend is up. So again, if you're very nimble, you can trade this high volatility, boil long, cold short, or ETFs, leveraged ETFs to trade this volatility in natural gas, or if you just want to trade the long-term trend, UNG, UNL, all of those we have in our ETFs Google sheet. Also got that strong rejection off 2750 and gold, strong rejected back down. You can see there's the 50 levels, so 2650, 2700, 2600. These 50 levels tend to be strong support and resistance levels. So we'll see if it gains support at 2650. If it breaks back down to 2600. So again, you can trade this volatility with gold with some of our ETFs. We have in our ETF Google Sheet as well. I believe the Crow has been making bank using GDXD, which is the short, GDXU, the long. Similarly, silver got rejected off 33, broke down below 32. It's got good support at 30. Again, you can trade this volatility along with AGQ, short with CSL. Again, you can find all these in our ETFs Google Sheet. Hopefully we'll have some time to look at those. Also want to look at the ETFs for platinum and palladium. They've come back down, but we can see if they're near their 52-week low or if they've still got more downside to go. Copper's been pretty flat. Other commodities mostly up, corn up, oats oscillating, wheat making lower highs. We'll see if it breaks that mid 550 or so, breaks down further. We'll see if there's a long opportunity going forward. Soybeans down. Again, we talked about tariffs. We looked at various tariffs, impact on various agricultural goods, cocoa soaring, coffee finally rejected, sugar finally turning back down. Again, we see this big reversal in the bond prices, so bounce up in all the bond yields. So again, in my humble opinion, the bond market's kind of fighting the Fed. Yields are going up, prices coming down, which is kind of contrary to them cutting, even though, as we'll see, probability of a cut is pretty high. So the bond market might be sniffing out that inflation's going to be stickier, and maybe the Fed's going to overcut and have to reverse course. They might be sniffing out some other issues, but again, the bond market is definitely moving contrary to rate cuts. Dollar's been pretty stable around 105, 106. Euro didn't quite make it back down to parity, pretty flat at 105. There's talk now about a potential second yen carry trade unwind coming in January. They don't expect the BOJ to hike rates in December, but possibly in January. We saw the yen head come back down. Again, potential for some significant volatility, negative reaction if we get another yen carry trade unwind potentially in January. So I hope that all helps. Okay, I'm going to skip forward right now. I will come back to ETF. Hopefully we'll have time. A lot to cover, so let me grab a drink and we'll look at the Federal Reserve interest rate decision for December 2024. We'll look at the Fed rate monitoring tool and the CME watch tool. We'll also talk about some strategies related to what happens if the Fed does or does not cut interest rates this week. Welcome, Pod. Thank you for joining us. Hope you're doing well. Good to see you here. So let's look at what the market thinks the Fed interest rate, Federal Reserve is going to do in terms of their interest rate decision for December of 2024. Again, we'll look at the Fed rate monitoring tool and the CME watch tool. Again, you can find both of these tools in the reference links section of our homepage. Again, homepage is BeachBum Trading. Again, we have links to all the tools and resources we frequently use in the link section of our homepage. We've done several videos on how you can use the Fed rate monitoring tool and the CME watch tool, and you can get more information about how to use these tools to see the probability of various Federal Reserve interest rate decisions via the links to those videos. So let's look at those tools a sec. We'll get the Fed rate monitoring tool first. We see we've got a countdown clock to the decision. So we can see right now there's a 99.6% chance that the Fed's going to cut by 25 basis points and a 0.4% chance that they cut by 50 basis points. So the market is expecting a rate cut. And what that says is if we don't get a rate cut, the market may react very negatively. And the expectation is for a further cut. So that may already be, that's such a high probability that may be all priced in. Again, if we don't get a rate cut or we get some negative commentary from Powell, we could get a very negative reaction from the market if it's different than their expectation. So for December, the expectation is from the Fed rate monitoring tool that we get a 25 basis point cut. Let's look out into January. So January is expecting a hold, 70, almost 80% chance that they're going to hold, 20% chance that they do a further cut. So right now the market is expecting 25 basis point cut in December, hold in January. Look out to March. So March, 40% chance they're still holding, 50% chance we get another 25 basis point cut, 10% chance we get 50. So again, right now, in terms of the December 2024 Federal Reserve interest rate decision, the market is expecting a 25 basis point cut. In January, expected a hold. Again, if we get a hold in December, which again, my humble opinion, not the Fed's not going to listen to me, but I think they should hold in December and see what the results of the new administration in terms of tariffs, deportation, etc. is. Again, that's just my humble opinion. I think they should hold in December, wait for the new administration policy, see what that impact is on inflation and on the unemployment market. Tariffs, again, could be very negative for inflation, and deportation may actually be positive in terms of the unemployment rate. So, but again, that's my opinion. The market says the Fed's going to cut. They've clearly telegraphed they want to cut. I would expect that they're going to cut, even though I don't think that they should. So we'll also look at the probabilities in the CME FedWatch tool. And we've got the countdown clock. See again, 96% chance that they're going to cut by 25 basis points, 4% chance that they're going to hold for December. Go out to January. We've got a 78% chance of a hold after the first cut. Only 3% chance that they've not cut at all by January. And we've got a 18% chance that they're going to make another cut in January. Go out to April or March. So now no cut at all, 1%, one cut, 36%, two cuts, 52% chance, three cuts, 10% chance. So that's what the CME FedWatch tool says. We're also going to get a new dot plot on December 18th. So you can see previously the expectation for 2024 was that the rates would be about 4.5. By 2025, we drop another whole point to 3.5 or 3.25. By 2026, or below, maybe 2.75 or so. So again, we'll get a new dot plot on December 18th. So again, you can see here's the actual rates, the dots. So the majority, 4.37, 2024. 3.37 or so, or 3.125. So you can see where the majority of the dots fell. Longer run. So again, we're supposed to come down all the way from 2 points, long run down to 2.75 or 2.5. So very long term by 2027 down to about 2.88. So again, we'll get a new projection, new set of dots on Wednesday, and we'll see if this curve shifts upwards or downwards. Again, my humble opinion, I think they're going to slow the rate of rate cuts as inflation is relatively sticky, unless we see a significant deterioration in the job market. So we've had several discussions in the past about how to make money trading when the Fed cuts rates. So you can hear our previous discussion about sectors that benefit from rate cuts, sectors that may suffer from rate cuts. And again, you can listen to those previous discussions, those strategies on how to make money trading when the Fed cuts rates via the links to those several videos in our notes. So people in our community and our chat love to hear what you think. Do you think the Fed's going to cut rates on Wednesday for their December 2024 decision? Do you think they should or should not? Why or why not? What do you think the projections going forward? Do you think they're going to slow their rate cutting cycle or stick to their previous dot plot? Love to hear your comments in the comments to this video in our Discord, etc. Let us know what you think. Love to hear your opinions and thoughts on that topic. Also, we've been talking about how to make money trading in December 2024, so you can hear our looks at the historical trends, sectors and industries, how the markets perform in December, sectors and industries that perform well in December. Also, I wanted to quickly talk about tax loss harvesting for this year and the wash sale rule. So if you're unfamiliar with those topics, get more information via those videos and the links. This is essentially our last full week until we hit the week of Christmas. So I think most people are going to do the majority of their rebalancing this week, and probably major fund managers, market makers, well, not market makers, but money managers, fund managers will probably take off the following week. So we'll see a drop off in volume. I think we see the majority of the tax loss harvesting may wind up mostly this coming week. I think they'll wait for the Fed interest rate decision, but then we might see a dramatic tax loss harvesting this week. A lot of it may have already been done. People front running it. We saw record inflows, people expecting the Santa Claus rally this year. So if you're not familiar with what the Santa Claus rally is, you can get more information via the link to the video in our notes. The other factor I was talking about with the momentum trends, again, my humble opinion, I think the new administration, Trump administration, wants to cut taxes. So if you're going to take a tax loss, you'd probably get a bigger bang for your buck this year. If you have a gain, you'd probably be better off waiting till next year to take that gain, as potentially the capital gains taxes may be lower next year. So I don't think we're going to see a whole lot more profit taking in the Mag 7 and the mega cap techs, and therefore, in my humble opinion, I think we're going to continue to see that momentum trend, upward trend in the Qs, driven by mostly the Mag 7, the mega cap techs. Might see significant weakness in other technology, particularly your money losers due to tax loss harvesting. Again, I think a lot of that will wrap up this week. But again, even things like Bitcoin, I probably won't get a sell-off till early next year, as you don't want to book the gain this year, be better off booking it next year. So again, a lot of our strategies we need to focus on through the end of this year, and then we'll reevaluate, refocus again in January. So Again, we'll also get a lot of wait and see for the Federal Reserve interest rate decision. So lower volatility, probably waiting for that decision on Wednesday, even though the market expects, a cut. Again, if they don't get a cut, could get a significantly negative reaction. So protect your profits, be ready if we do happen to get negative comments or don't get the cut, negative comments from Powell could get some increased volatility, some pretty violent negative reactions in the market come Wednesday, particularly positioning for the end of the year and early into next year. So let me grab a drink and then we'll look at ETFs and we can talk about any other questions, comments that you may have. So if you have any ETFs you want to take a look at in the chat, please throw those up, or any topics, themes, commodities, etc. We can look at ETFs for those in our ETFs Google Sheet. Grab a drink a sec. Okay, after we come up with our trading strategies, trade ideas for this trading week, and we go to our ETF Google Sheet, and we can identify ETFs that we can use to trade that trade idea, that trade strategy, be it long or short. And you can do the same thing. You can use our ETF Google Sheet to find ETFs to support your trading strategy, trade idea. You can get 24/7 access to our ETFs Google Sheet by joining our Patreon. Just a quick note is you can now gift Patreon memberships, and we would love it if you are willing and able to gift a membership to our Patreon to your friends, family, fellow traders, anyone you would love to have join us in our BeachBum trading community who you think could benefit from our Patreon, all the tools, resources, early access to the videos, etc., available to our Patreon members. So again, just a quick note, you can now gift Patreon membership to your friends, help them join our BeachBum trading community and benefit from our resources and tools. Got a number of new additions to our research sheet and our ETFs Google Sheet. I'll quickly take a look at those. So firstly, in a webinar that Benzinger recently did with Direction, they announced that they've come out with leveraged ETFs on Palantir. So there's a PLTU is a long, leveraged long on Palantir. PLTD is a short, just 1x, so it's not leveraged, but it's inverse ETF on Palantir. So if you're interested in trading Palantir using ETFs, particularly beneficial from the short side, as you can't directly short individual stocks and retirement accounts. So if you're looking to short Palantir, one way you can do it in a retirement account is by using this PLTD ETF. So you can now find the risk reward profiles for PLTU, leverage long, PLTD, short Palantir via those ETFs. Again, they're relatively new, so not a whole lot of history on them. We'll see just quickly. You can again find the links to their FinViz profiles, their ETF database profiles via the columns in our Google Sheet. Again, very new, so I don't have a lot of history. See, they're not optionable. So not a whole lot of AUM yet. So we'll see if these catch on. Not a whole lot of volume yet. So again, these are brand new. We put them in our ETFs Google Sheet so we can track performance. And again, if you're searching for a long or short ETF on Palantir, you can now find them in the research sheet in our ETFs Google Sheet. We also have a number of other single stock ETFs in either our main sheet or our research sheet. So we have single stocks on NVIDIA, Tesla, etc. So if you're searching for single stock ETFs, either leverage long or inverse, so you can short individual stocks using an ETF, you can search for them in our ETFs Google Sheet. So the other block that I added to our research sheet was a set that were mentioned in their trend following or momentum ETFs in a recent video by the ETF Guide. Some of these are relatively new. I would recommend, I'm not going to go through them in detail due to time. We may come back and revisit them in more detail in the future. But this video by ETF Guide, they did a very good comparison of these various trend following or momentum ETFs. We've now added them to our ETFs Google Sheet, and we'll sort. You see, I named them trend following or momentum. So they'll sort as trend following. So if you're interested in a trend following or momentum ETF, you can now also compare these various trend following and momentum ETFs. Again, those four were reviewed in this video by ETF Guide. Previously, we've also had QMOM and we've reviewed MTUM, and you can hear that comparison of QMOM and MTUM. We have a link to the video in our notes, and you can compare their performance, composition, etc., expense ratio using our ETFs Google Sheet. Again, you can see their risk reward profiles, see their trends of performance, etc., and hear more about those via the link to the video from ETF Guide. So I hope that all helps. And again, we may come back and revisit those that were mentioned by ETF Guide, do a little deeper due diligence into those in the future. But again, you can see all those in our ETFs Google Sheet, explore them in more detail via the links to their profiles in FinViz, ETF database, all of which you can find in our ETF Google Sheet. And you can also find QMOM and MTUM. QMOM is in the main sheet, and MTUM is in our research sheet as a momentum. So I hope that all helps. Again, if you're looking for, to follow the momentum through the end of the year, one of these ETFs, again, they're all relatively high, as most momentum stocks have been trending up, for quite some time. So again, you can see the risk reward profiles, more risk than reward right now, with the exception of that AHTL. So, but if you want to, again, follow the momentum through the end of the year into the Santa Claus rally, one of these momentum ETFs might be interesting. Okay, again, let me check the chat if anyone else has any other topics. Otherwise, we'll spin through some of the ETFs real quickly. So again, if you have a particular commodity, theme, ETF, etc. you want to look at, please let me know in the chat. Okay, I'll try to keep an eye on the chat. But very quickly, we talked about SARK, the short on RK. Again, we have been watching. We'll see if we get a exuberant reaction in RK, and if we get that interest rate cut, that's good for growth stocks. even though, most RKs are big money losers, so they may react to over, exuberantly. They had a pretty exuberant reaction in RK lately, hit a new 52-week high. So if we get that exuberant pop near that 52-week high or higher, we're looking to short with SARK. Again, Bitcoin, I expect that to trend up, through the end of the year, but we're looking for a top. Short opportunities with BITI on Bitcoin futures. Continuing to watch Brazil for a bottom. That's one thing I wanted to talk about again today. Again, we're kind of running long, but I do want to show you this as well. I've been watching for the setup in Brazil. So I tried out looking at an ETF in ChartMill. So I want to show you how to use ChartMill for ETFs. So again, it won't have a fundamental analysis, as it's not a stock, it's an ETF. So I was wondering if we could get technical analysis for ETFs in ChartMill, and you can. So you can go to the technical analysis, look at the technical rating. Again, EWZ, this is the long on Brazil. So I wanted to see what the setup was. So it's getting a little bit better. So it's 6 out of 10 now. I think it was 5 out of 10. So I'm looking and watching that setup for EWZ in Brazil. And if that gets to be a good setup for a long in Brazil, then our preferred leverage long, once it starts trending up, would be BRZU. And this is a leveraged ETF, so we want to see a strong upward trend. So we can follow that trend with BRZU. Or if we think it's going to be choppy, we don't want the degradation due to leverage, we can just use EWZ. So again, another nice feature now of ChartMill is the ability to look at the technical setups for ETFs in ChartMill. The other one I wanted to quickly look at that we've been watching is BDRY. This is dry bulk shipping. And again, we'll be talking about this more tomorrow as well. The technical rating currently 0. Setup is only 3 out of 10 right now. Had been trending down, as we'll see, for quite some time. In my humble opinion, it looks like it may have found some support, may have found a bottom. So we're watching for if it's going to hold that bottom. You can see the trends have all been down. So again, you can see all the trends, performance of ETFs, now also in ChartMill. So again, we're watching BDRY to see if it's found some support, got a bottom. Looking at the setup in ChartMill as that improves, we'll look to go long BDRY going forward. Also talked about MJ. Again, if you're looking for a dividend stock, you might want to consider that. But again, I don't see a whole lot of catalysts until we get into next year. Risk of tax loss harvesting. China's been very volatile, so you can long with yen, short with yang. I know again the crow, several of our BeachBum traders trade the volatility in China with those ETFs. Talked about BDRY. Again, I would not step in front of the FANG stocks till the end of the year. So even though FANG D is showing at a bottom, or near 52-week low, again, I'm not willing to step in front of a mega cap, Magnificent 7 mega cap tech through the end of the year. Again, we've got a number to trade the volatility in gold, EDXU long, BLD, GDXD short, also several other options, and we've had several discussions on those. Again, boil and cold for natural gas, gush and drip for oil or UCO, USO, long, SCO short. Here's palladium and platinum. You see, okay, so they're still somewhat above. Looks like platinum's getting close to its 52-week low. Not a whole lot of risk reward, but again, if you want to trade the volatility in platinum and palladium. Never had much luck with that pal. Surprised REMX, which is the rare earth, with China curtailing exports. It had spiked up initially, but it's been trending down. Same thing with MP Materials. Again, the Russell's come down, but if we get that exuberant pop on an interest rate cut, might be a potential to catch that short. Now, if you've already caught that rollover in the Russell with SRTY, congratulations. We've been watching SRTY for some time. So again, congratulations to everyone that caught that previous rollover. Talked about silver, AGQ long, ZSL short. Talked about you can also trade the rollover in the small caps using TZA or TNA long. So again, if we get that cut, we get an exuberant pop in the small caps. Bonds, again, we saw that trend back down in price. We do get a 52-week low in TLT. Might want to pick up some TLT or TMF. Again, we expect the Fed to cut rates, a point or two going in the next couple of years, so the trend eventually should be up. Volatility has been getting very low. Watching wheat come down, and also the yen. So again, you can find all kinds of ETFs in our ETF Google sheet. If you have any questions or you're looking for particular ETFs on a topic or commodity, theme, etc., let us know. We can do the research, add those to our ETFs Google sheet for you, and you can find and use those as well. So I know we ran a little long today. If I missed your question or the ETF you want to look at, I apologize. Please put those in the comments to the video or contact us in our Discord. And please tag us in our Discord or BeachBum Trading, all lowercase, all the characters, symbols, numbers, etc. Anyone else is an imposter, and please ignore and report them. Again, if you have any questions related to trading, you want to look at a stock, an ETF, etc., please post those in the comments to our videos or in our Discord. Also, we'd love to hear your recommendations for improvement on what we can do to improve our weekly trading game plans, any of our videos, tools, resources, community, etc. We really need your feedback to help us continue to improve and to continue to add more value for all of our BeachBum traders. So we hope that you like this content. Please do us a favor and smash the like button. We'll just try to get the YouTube algorithm to someday show us some love and share our content with fellow traders, keep building our community. We also really need your help to invite other traders to come join us on the live chats for our live streams. Join us for the discussions in the Discord, and we'd love it if you'd repost our content on your social media sites to, again, help other traders and help encourage them to join our community for the mutual benefit of all of our BeachBum traders. So thank you again to everyone that joined us today in the chat, everyone who's watching after the fact. And hope you'll come back tomorrow, 10 a.m. on Sunday, where we'll take all of these strategies, trade ideas, analysis, market analysis, etc., and we'll be selecting our top swing trading stocks to watch, stocks in our bullpen, stocks in our shopping list. Also talk about how we can use dividend payers and several option strategies to generate income while we wait for swing trading stocks to set up. So again, we hope to see you all again tomorrow for part 2 of our weekly trading game plan. And otherwise, have a great day.